as we start. So welcome everyone. I'm Batu and I'm the host today. Thank you all so much for joining the Startup Club FinTech Pitch Night today. As a startup club, we organize industry-specific investment conference and pitch night and this type of fundraising events for more than 4 years now, since 2019. And we successfully organize over 100 events and dozens of companies got funded as a result of these. We cover a variety of industries such as health tech, ed tech, B2 tech, green tech, fashion tech, FinTech, and many more. Today, we invited 7 FinTech startups. Let me share my screen. SimplifyTrading, Pyrpose, monitok, Nude, Join, Bitcredit protocol, and EarnBIT. They are specializing in different fields, such as AI algorithm for trading, climate finance, crypto exchange, personal finance, crypto e-wallets, Bitcoin, and digital assets. Each of them will do 5-minute presentation that will be followed by 6 minutes Q&A and feedback session with the advisory panel members. We work with 4 investors from Plug and Play Tech Center, MMC Ventures, BlackFin Capital Partners, and Goose Valley Ventures for the panel. And I'm going to ask them to introduce themselves quickly. But just a last minute update. Anna from Plug and Play Tech Centers is not able to join the conference anymore, but luckily her colleague Salim stepped in to replace her. Thank you all the advisors for being with us and your contribution. Salim, could you please introduce yourself?
Sure. Hi, thank you for having me. So my name is Salim. I joined Plug and Play about 2 years ago, and I mainly deal with everything related to FinTech out of our Paris office. To give you like a quick word about Plug and Play. So we are a corporate innovation platform and a venture capital firm based out of the Silicon Valley. So on one hand, we support corporate partners by introducing them to startups with cutting edge technology. And on the other hand, we also invest in early stage startups. So we do pre-seed, seed, and Series A, and we are quite agnostic, but I focus on FinTech.
Thanks so much, Salim. Thank you for being with us. Tom, could you please?
Hi, everyone. Yeah, echoing. Thank you for having us on. Yeah, it's great to see the companies and receive the decks in advance. So it was really enjoyed reading through them. So I'm Tom, a principal MMC Ventures. We're a Series A focused fund based here in London. We invest across Europe in mainly B2B software. And there's not really any sectors that we don't really touch, but my focus area specifically is FinTech. I also look at climate stuff and had a background both as an operator. Most recently was chief of staff of a renewable energy company called Bulb, which some of you may know of, and it is unfortunately no more part of the Octopus Energy Group. And prior to that, I worked at Schwarzkopf, which is a venture builder focused on building FinTechs here also in London. Great.
Thank you, Tom, for being with us. Nathalie, please introduce yourself.
Thanks for the invitation and pleasure to be here. So with BlackFin, we are a fund dedicated to financial services and insurances. So that's because our founding members are entrepreneurs themselves. They founded the online brokerage service Fortuneo in the 90s, and in 2006 they successfully sold it, and after that they found BlackFin. And with BlackFin we kind of follow 2 different strategies. On the one side we have the PE buyout strategy, and on the other side we have the venture tech strategy, for which also I'm working for. And so we invest in startups across Europe, mainly from Series A to C, with ticket sizes from 5 to 50 million. And I'm with BlackFin for over like a year now. Before that, I was working in consulting, also with a specialization on banking and FinTech topics. And kind of spent a couple of years abroad in Asia, Europe, and South America. And I'm really excited for all the pitches, and thanks again for having me.
Thank you, Nathalie. Robin.
Hi, how are you guys? Robin at Goose Valley. It's running Goose Valley myself. It's an early stage FinTech investor focusing primarily on the Nordics. We're more just a pure play VC investor, and I have my background from everything from starting fintechs to operating them to exiting as a CFO. Really happy to be here to do this, help out.
Thanks so much, Robin. Okay, then let's get started with the first pitch. By the way, investor in the audience, you can use the chat to interact with the presenters in case you have any question or comment about the companies, but only the advisors will interact with the presenters by opening the microphone due to the time constraint. And the first company is Simplified Trading. David Forino, founder and CEO, will do the presentation. David, you can share your screen and start a presentation. You will have 5 minutes for presentation, then there will be 6 minutes for the Q&A part.
Hello, everyone. Yeah, now I just got enabled before I was not able to share. Okay, I hope everybody can see the screen.
Yes.
Okay, so hello, everyone. Today I'm going to be presenting Simplified Trading. We provide cutting-edge AI technology to support financial trading. Large financial institutions have a competitive advantage using AI over all of the others, when instead companies with a capital below 10 million cannot afford such a technology. It's very expensive, and also to find such people that can use AI in finance, it's pretty difficult. The solution to this problem is to provide this cutting-edge AI technology in an intuitive platform, easy to use, that doesn't require AI expertise. So we launched a first product for the platform. The first product is able to eliminate losing trades before they are executed using predictive AI. The way it works is the user would come to our platform, upload a CSV file containing very basic information about the historical performance of the trading system. We create a model based on this information, and then the user can use it just with a click of a button or using our API. And the outcome of this is reducing risk for the trader as well as increasing the profits. Our business model is, as of now, a simple SaaS product. We sell every AI that we create for $199 a month, and our customer need, on average, 8 of these models for their system, bringing to about the 1,600 a month revenue per customer. The financial market is the biggest market in the world, but more specifically, we target Forex and crypto. And Forex is the largest and the most liquid market in the world. With this, we believe that within 5 years, with just like getting 1.8% penetration in the market, we are going to be able to get to 72 million. Our competitors, we have many competitors, but most of them are indirect competitors. They don't provide predictive AI. They might provide generic tools. They might be programming free, but they don't provide this AI technology. Our only direct competitor is PredictNow. But the big advantage that we have over them is the fact that our AI is personalized for the trading strategy that the user has, and this gives us a big advantage in terms of performance and in terms of flexibility of the technology itself. About our strengths, we have an IP on the software. Is extremely cost efficient. Our solution with near zero cloud cost to run the AI models, not to create them, but just to run them. The API is extremely modular, can be implemented anywhere, and there are definitely very high barrier to entry because finding those experts is very hard, costly, and might be even blocked by NDAs. About the team, we are a team of with decades of domain expertise. Myself, I have a decade of experience in artificial intelligence. Rita has run already marketing agencies before, and Enrico and Angelo are 2 professional traders with 5 and 10 years of experience respectively, and they're in the top 5 traders of 2023. As of today, we launched officially the product now very beginning of October. We made 21K in ARR, and since the beta testing until now, we got about 160,000 API calls to our system, and on average, that varies a lot, but on average, our customers got plus 30% on their profits. The vision is to become the point of contact for AI-driven financial trading. And we are now raising 550,000 on a safe note at 5 million valuation cap. Here you can briefly see an overview on how we're planning to spend it, and as well as the cap table. So if you also think that AI is here to stay, especially in the financial markets, is the opportunity to invest in the future of accessible AI for financial trading. Thank you.
Thanks so much, David. Great presentation. Robin, would you like to start your comments?
Yeah, yes. I really think this is an interesting space. I have my background from trade tech company as a CFO, scaling and exiting, and invested in a IMS system today. So it would be great to understand a little bit more about who the customers are that you are targeting, because I think that's super important, and that's what these cases usually comes down to. And it's quite easy to build the products, but if you don't have the right focus on the customers, you can sort of fall between the shares.
Exactly. So our focus is on definitely B2B, and on the more specifically, we can say trading firms or family offices, or anyway businesses doing trading for a living. We don't target the average retail trader. Most of them lose money on the market, so whatever service we will provide them, they will end up churning, because they would just losing money on the market. So we target definitely the wealthier one, let's say, and I hope that answers. So trading
why do you cap it at 10 million euros? It looked like you were doing that for people trading.
That's made of yeah, absolutely. So that's made out of research that I've done. Of course, you can. There are quants, there are experts in quants that do that are able to build AI systems, right? So those usually are extremely expensive. That they might get just by themselves like 500K. Depends, of course, on the experience. And definitely it's something that the companies, like you need to invest in research, is something that is not static. So you cannot just like create a software and just keep on using it. You need to have some sort of flexibility, and those guys that know what they're doing to make it actually effective, it costs a lot also in research. So in order to justify those expensive, you need to have a very high capital. Otherwise that would not make sense to get like 5% higher profits for if you spend too much on the expenses.
I just think it might be a middle layer there that would be really attractive to go after. Just one last question before I hand it over. How do you connect this to the existing trading platforms that these kind of investors use? And I think it's really important how it connects in and how it's user friendly in that way.
Absolutely. So the way it works is that we provide an API. So the API is really like a very low code, so like 1 or 2 lines of code, and they can just call the system and get a prediction. We are not connected to the broker. So the way we work is that they will have their own system. They might even have their own entire platform for trading. They might even develop everything themselves. It's just the API call that they make before they execute the trade. So it can be implemented without any limit. In case, because there are such cases, although not from the customer that we have as of now, in case they have system that give them signal and they execute manually, we also provide an UI interface just to ask for the prediction.
Okay. Cool. Thanks.
Thank you, Robin. Nathalie, do you have any comment or question?
Sorry. You mentioned that you have 160,000 API calls. Is it like, how many do you have on average? And how often are your users or your customers are using your solution?
Yes, absolutely. So I believe it's here. Yeah. So there isn't really concrete numbers that I can give you, because the number of API calls per day really depends on the trading strategy. You might have a strategy that it's a scalping, high frequency, not high frequency, like a scalping strategy that is called 500 times in a day. And you can have also days in which that strategy doesn't execute. So there isn't really like a stable amount of API calls that we get per day. But this 160,000 API calls that we got is over the year of beta testing, also from the very beginning when we got those professional traders on board. So that counts everything, not just October.
And how many customers did you have for the beta test?
At the moment, we have 2 customers. We had more customers on the beta. The reason why they didn't continue is because they want to grow into different markets. So we get a lot of requests for crypto, although it was not original plan for crypto. That's why we're now also integrating crypto. And we even got requests for Asian markets, like, for example, in India, which is not our target. So, of course, as you can imagine, if they put their money into that direction, that's something we can cover at the moment. But on a daily basis, they call it as soon as their strategy asks them to enter the market. And as I said, like, they have multiple strategies running in parallel, so it can be 2 to 3 to even 10 a day of these API calls.
Okay, thank you.
Thank you, Nathalie. Tom or Salim?
Sure, I'll jump in. Quick question around, I guess, your pricing strategy, because it seems an unusual approach to have a sort of SaaS license fee. And I appreciate you're really early and you know with your first customer, but what's the rationale behind that cost? Because clearly there's a serious value capture here that you're potentially supporting a customer with.
Yeah, so probably the most reasonable approach and the most profitable would have been just to take a profit share, like, or maybe cost per API call that we would make. We wanted to start with something more easier to understand, to overcome potential barrier. For example, what the information that we get now from those trading firms is very minimal. Some of them, they're very concerned about security and they don't want to share how much of money they're moving in the market. Therefore, if you would like to, for example, get a margin of the profits that they make, that would require us to know how much money they're moving into the market, and that could cause some friction. So at the beginning, now that we're establishing our brand, we want to have something lean, something also more predictable for us in terms of revenue. But I don't believe that this pricing model is going to be static for the next 10 years, of course. We see much more potential in many different ways.
Thank you so much, David. Time is up, actually. Thank you for all the questions. Thank you for presenting, David, sure. And see you later.
Thank you.
And the next company is Nude. Crawford, CEO and founder of the company, will present the opportunity. Crawford, please share your screen and start the presentation.
Thank you very much, Batu, and hello, everyone. My name's Crawford. I was previously a consulting actuary to some of the largest pension funds in the UK, over 25 billion of assets and liabilities I was personally responsible for. And I adopted an approach of setting a clear goal everyone could understand and get behind, using technology to pull all the information together, and a clear framework for better and quicker decision making. And it worked incredibly well, turning large deficits into large surpluses. I decided I wanted a new challenge. I've got 3 kids, and I can see the challenges they face of a financial system that doesn't work for the majority. It's complex, it's fragmented, it's not fair. Not everyone can afford financial advice. In fact, very few can, so they're excluded essentially. So created Nude. Let me just share the screen. Hopefully everyone can see that.
Yes.
Thank you, Batu. We launched in March 21, focused very much on product market fit. I'll show you the metrics in a minute, but in essence, what we've built here is a new way to interact with the financial system for everyone, not just those that can afford financial advice, using a combination of technology, whether it be machine learning, AI, deep learning. It doesn't really matter. It's just technology to automate as much as we can, and behavioral science. And we apply that across 4 pillars. First of all, setting a clear goal for our customers in an interactive way and using time to engage. You need to save £30,000 is not very helpful. It will take you 6 years to get there. Is a lot more meaningful. In-app content and community, little bite-sized bits of information. What's interest rates? What's a mortgage? How can you save money going on holiday? Really interactive. We've got a cash savings account in-app, which is under our own permissions, and we offer an investment option as well. And then we've got ideas, and this is where we use open banking to supercharge everything, linking in with customers' bank accounts, analysing their income and their expenditure to give them ideas to get them to that goal a lot quicker. Some of the ideas for information would be the parental contribution. Share your goal with your friends and family. Say Christmas, your birthday. People are using it for weddings as well. They can then contribute in and get to their goal quicker. You're spending a lot on home delivery food or prep lunches, and then we monitor and help them reduce their spend and again get to their goal sooner. This is all driven by AI technology. To automate it, you can ask any question about your finances and ask how to get your goal quicker, and it will come up with prompts to get you there sooner. These are the metrics we're achieving. Our first vertical is home ownership, but this applies to any goal: car, wedding, retirement savings. We've got over 400,000 registered users, over 10,000 paying customers, a young average age, 23, 70% female, saving a lot of money with us, a really high level of engagement. When you think the basic essence of it is helping people to save and invest in a different way with engaging 10 times a month in the app. We're acquiring a paying customer for £20, which is really low cost. I mean, this is a 20th of some of the banks and asset managers out there. And we're making £60 per customer through a membership fee, £24 a month, a net interest margin, a platform fee, and we're just looking at affiliate revenue streams as well. With a high level of retention, after 24 months, 74% of our customers are still with us. Why are metrics so great? We've got a brand that resonates, a tone of voice. We've got a community newsletter, adultish, with over 250,000 subscribers. We're solving a problem in a very different way. Most banks, building society, asset managers sell products, right? A current account, a savings account, investment account, a mortgage, insurance, etc. We're solving the customer's pain point. I want to be looked after in retirement. I want to look after my children. I want to save for and buy my first home. And the product is easy, engaging. Love to give you an app demo and our AI Copilot demo if you're interested. This is a team: myself, Johan Pavi, ex-Deliveroo and Depop, Kate Mackay, Joe and Ryan, our data scientist. We're raising money just now and also speaking to strategic partners as well. Would love, if you're interested, please message me directly. Questions, please.
Thank you, Crawford. Salim, shall we start with you, sir?
Yeah, sure. Thank you. And thank you for your presentation, Crawford. So first of all, I have a question. So I think on your extended deck, you mentioned that you're going after B2B. Did you manage to secure any partnership? And if not, like, how would you approach B2B?
Yeah, B2B is my background. I came from, as a consulting actuary, advising large corporates on their employee benefit strategy. And most offer a retirement savings offering. They don't offer savings or investing for the majority of people during their life. Yeah, helping their employees save for a car, a wedding, their first home, etc. And you imagine an employer that offered that. So we've been speaking to 10 potential employers, and I'm just holding it back a little bit. We've launched the lifetime individual savings account for first-time home ownership. As soon as we launch the ISA, we're going to go back to those 10 and my contacts, and then they can start offering it to their employees. And that's a route into retirement savings as well, because again, the retirement savings, it's quite basic products from historic providers like, I'll not say like, but you know who they are.
Sounds good. Thank you. And one last question on my side. So could you explain a little bit more like the underlying AI technology? Like, how does that work exactly? Like, which LM do you use, and how safe is it for a customer to input like their private data into the platform?
Okay, excellent question. We actually use the data that the customers give us. So the customer downloads their personal details when they're onboarding. They set a goal. Where do you want to live? What type of home do you want? We're linked in with property prices, so we know how long it's going to take them and where they want to live. We know all that information, and we're also connected into their bank account. So we've got all that information, and we can use that all that information to give our customers insights using technology in a very different way. We don't use open source AI models type thing. They're all our own language models. And the reason for that is to use that data in a secure environment rather than just pushing out to ChatGPT or OpenAI, and it's not secure. So it's and we're built in a modular way as well. Debt consolidation, ask a question about your finances, how much have I spent on home delivery food in the last 6 months? All of that is just driven by our own AI.
Thank you.
Thanks, Salim. Tom, any question?
Hi, Crawford. Thanks very much for that. And congratulations on getting to where you've got to. So, I mean, the impressive metrics, and I particularly like the 70% of your customer base being female. I think it's really, really great to get more women into personal finance. And so that's a real, fantastic achievement. I think my main question is around the kind of the initial product that you've got. Is it a LISA? Is all of the products, all of those sort of metrics that surround the product that you have today, is everyone getting into the LISA? And therefore, as you sort of, I guess, grow, how does that change the kind of economics of everything? Because it's a really compelling product, the LISA, but it doesn't obviously exist in countries beyond the UK. And I'm just sort of trying to understand how that impacts your TAM and what other products you're planning and how you make those sort of, I guess, attractive to the customer.
Yeah, the LISA is actually a very difficult product to sell. LISA does not mean anything to many people, right? Lifetime individual savings account. It only applies for 18-year-olds to 39-year-olds, and you can only save up to £4,000 a year. So it's quite a restricted product. We've also got permissions to do ISAs, individuals, which are tax-wrapped accounts where you can save up to £20,000, and general accounts, which you can just do cash and stocks and shares into. Over 10% of our customers have maxed out in the 4,000 limit, but want to bring more to our platform and consolidate it all in. So when we launch ISAs, we see a huge uptake in terms of the amount that customers are depositing with us. And they want to use it for the next goal. Once they buy it, we've already had over 100 people buy their first home with us and saying, look, can we use this for saving for other things? So once we get other goals and other accounts in, I think it will increase the customer base and improve those metrics further.
Yeah, that's really clear. Yeah, thank you.
Thank you, Tom. Nathalie?
I'm curious about your go-to-market strategies and how do you reach your clients?
Yeah, we started off building those registered users through TikTok and Instagram ads with a few affiliate partnerships. But what we're doing is we're now finding that about 60% of our customers come from word of mouth, and that helps drive down why the CAC is so low at £20. And we'd have built-in app features that help with that virality of it. So we've got a team up feature where you can share the goal with the person you're doing that goal with. 70% of homes are bought with somebody else. You can apply it to the same as weddings or retirement as well. And what they do is they both see the same goal, both see their combined savings, but with individual accounts as well. And that's part of the reason why it's highly engaging, and it's highly sticky as well, because once you're in that ecosystem and everything's together, it's quite compelling.
And in which geographies are you currently active? Is it only UK for now, or?
Yeah, we've only launched in the UK, but we've spoken to a number of other people that would love it in their countries as well. So it's something we would love to expand into.
Okay, thank you.
Thank you, Nathalie. Thanks so much for the presentation, Crawford. Time's up right now.
Thank you very much. Cheers, everyone.
Thank you. Cheers. And the next company is Pyrpose. Kevin Kyer, co-founder and CEO, will do the presentation. Kevin, you can start your presentation now.
Perfect. Let me share my screen. See my screen okay?
Yes.
All right. Give me just a sec. Hold on. All right, here we go. So I would like you to think about the last time you opened up the news and you didn't see something about climate change in it. Whether that was fires in Greece, fires in Canada, fires in Hawaii, a tropical storm hit in California, floods as recently as last week in Hong Kong. something really drastic needs to change if we really want to combat climate change. And for us, that problem that we want to change are the systems of climate finance. A lot of people call this the climate finance elite, banks, institutions, the wealthy that are doing the investing. A traditional system where the more money you have, the more access you have to invest in climate solutions. But then we have the other side of the coin, which is, as we all know, so many people demanding to be part of the solution. We're very fortunate here in Europe and that we're very aligned on the climate. The European Commission tells us 93% of EU citizens see the climate as a serious issue. So how do we bring these two problems together? Simply put, we must innovate in climate finance by changing who does climate finance, changing how climate finance is done, and we change where it happens, therefore unlocking the passion in climate. So welcome to Pyrpose, where basically anyone that wants to or cares about the planet, and there's many of us, are able to invest in the solutions that reduce future carbon emissions. When I say solutions, I mean the transition from fossil fuels to clean and renewable energy. Products like this, which is just a simple solar lamp that goes into off-grid communities, not only reducing carbon emissions, but changing people's lives. So this is a platform that's accessible, transparent, and engaging. I can briefly show you how. So in your first experience with us, you can take a carbon footprint. All that carbon footprint is guidance. You know where your carbon footprint is. Now you can decide how much you want to offset, or maybe you have other goals in mind. But the idea being accessible. But now when you're on the platform, you're able to act and behave like the climate finance elite. You're having access to the CEOs, the companies, the solutions, and what they're doing. Excuse me. So our model, business model, is about regenerative finance, meaning leave the money on the platform. That money goes out to the companies do the work, and then as that money returns back, it continues to go back through the cycle. So you see exactly how the money is being used, and you get to compound your interest. So we're lending to those climate companies, like I mentioned to you before, and they return back those interest rates together with Pyrpose and together with our community. We just went from what was a private beta to a public beta just a couple weeks ago. We got some great results during this period. So we saw that click-through rates on our advertising that we did were 4 times industry averages. When we asked people whether they would transact as a donation versus getting a return, the profit motive here is very obvious because 66% said they would, which is very good. And the last point to bring up is that 60% said they would share with friends and family after transacting. That's pretty interesting because for me, on personal finance, I don't go out on social media and tell people I just made an investment. Obviously, that is very promising for our business. So my name is Kevin Kyer. I'm the co-founder and CEO of Pyrpose. I've been building out digital marketplaces throughout my career. I got involved in climate several years ago, and my co-founder and CTO is Oleg. Oleg has been spending his career in FinTech, but he's been writing code since he was in high school. The two of us have the combined experience to develop the right team and the right product to innovate in climate finance. I wouldn't be here without my amazing board. My amazing board is the people that put the initial capital into this business. They all come from impact, climate, etc. And they're all members of Young Presidents Organization, which has been very helpful in shaping the future of our business. To date, we've raised $1 million from business angels around the world, including CVVC and Zug, and that got us to our private beta. Right now, what we're doing is $500K in our seed round. That allows us to further advance on the regulatory, marketing, and bringing in key hires as we expand our business. Again, I asked you at the beginning, have you read the news and not seen something about climate? In the future, our view is that you should be reading news about the climate, but it was the opportunity that the individual citizen had the opportunity to take the planet back by investing in those solutions directly, not just for the climate finance elite. Again, my name is Kevin Kyer. I'm more than happy to take your questions. Thank you so much for the opportunity.
Thanks so much for the presentation, Kevin. Robin, would you like to start with your comments?
First off, thank you for the presentation. I think, for me, this is so important, and the next one of the big next waves within fintech is going to be impact fintech and making a change and making a difference. But I want to ask you, the thinking around, it feels like this is a standalone app. It would be interesting to hear how you would integrate this into the infrastructures, the daily behavior, and sort of get over the threshold of just the early adopters, because that's, in my experience, it's quite easy in the beginning with these purpose-driven cases to, get the first ones, but you don't have the endurance, you don't get it into your daily behavior. So it would just be interesting to hear more about that.
Yeah, absolutely. So our go-to-market is specifically to start off on our own, right? So we've got to prove out everything that we're doing. And like I said, the advertising is going well. People are engaging. We had thousands of users over the summer. People are now transacting. And I couldn't agree with you more about finding those scale of partners. But we can't go to those scale of partners until we've proven ourselves out. When we think of scale of partners, we think of a couple of them. One is, where are climate conscious consumers going today? So where are they transacting to, say, buy clean or recycled products? Where are they going to consume their media? So that's obviously another place there. But ultimately, where we want to be sitting is that we are a capability that's embedded inside a neobank, right? This is a digital solution, someone who's very comfortable transacting on their phone, and they're not wanting to go down to a bank, fill in the paperwork and the processes that go through that. So absolutely, in the future, that's how we think about it.
So it's going to be more a blue label going white label, or is it still going to be their own brand?
I think we'd have to cross that bridge when we get there.
Okay.
I haven't thought about the branding aspect of it yet.
Okay.
But I'm open to how we explore that for sure.
Okay, cool.
I'd love to hear your thoughts and feedback on it.
Yeah, that will be really, really interesting. One final question that I've called out so many companies on is around carbon footprint.
Yeah.
How do you calculate that?
We don't calculate it, thankfully.
Okay.
We use industry standards. Well, you could say industry standards. We use reputable sources, and those reputable sources are what that comes from. I think a carbon footprint, and this is why I was very specific in that, because I know your point, this is guidance, right? To truly do a carbon footprint, you need to answer about 150 questions. The average user is not going to spend the time to take 150 questions, right? So we break it down to the very basics of transportation, your food, how you travel. I'm forgetting a category. Sorry, housing, shopping, right? Just to give it as guidance, but by no means do I think this is the only way to understand how you can do it.
Yeah, it's just my personal agenda with digital receipts is actually the only way you can start doing it correctly. So that's why I wanted to hear what your thought was. Thank you very much. Let's talk.
Absolutely.
Thank you, Robin. Salim, do you have any question, anything to add?
Yeah, thank you. So maybe one main question on my side. So I want to speak about the competition. So how exactly do you see the competition in your geography, and how would you compare to the rest of the players that are operating throughout Europe?
Yeah. So from a competitive standpoint, the way we break down the competitive landscape is anywhere there's capital going into solutions reducing carbon emissions. So right now, primarily, as I mentioned in my presentation, about 80 to 90% of that is being driven by institutions and wealthy, right? There are a handful of retail platforms out there. There's a few in the Nordics that I think are pretty impressive in what they're doing. And then you can go into like a very traditional business and get like an impact bond or a green bond or something like that. My view is all of these solutions, A, they're either not accessible because of the ticket price is so high. B, they're very not designed for today's age because they're not transparent, they're not engaging. And the idea of being able to really connect with what's going on and get a return, it's not there yet.
Sounds good. And one last question on my side. So this is related to acquiring like customers. So what would be your strategy to go after like the wild and get those clients, and like how much do they cost you?
Sorry, how do we get the what? I didn't hear that.
Yeah, so what's your strategy behind acquiring new customers, and how much do they cost you?
So we don't have a full customer acquisition funnel in place yet. We're targeting 20 Swiss francs or less and improving on that over time. But the strategy is definitely going direct to consumer at first. We have to do that to prove everything out that what we're doing. And then, as mentioned earlier, the whole goal is how do you partner where the climate conscious consumer is going? I mean, ESG investing as a whole is super big in Europe. I'm grateful to be living here, and it's growing, anywhere from 10 to 25% a year. So the tide is rising. The question is there a solution that speaks to the everyday person on the street and lets them feel really engaged at an affordable price point?
Sounds good. Thank you.
Thank you.
Okay, thank you, Kevin. Time is up, actually. Thank you for your presentation.
Thank you, guys.
And the next page is Bitcredit protocol. Hubertus will present the opportunity. Hubertus, feel free to start the presentation.
Yeah, hi everybody. Let me just share my screen, please. One second. There's a okay. Okay, I hope this works because it just asked me to leave the meeting. But let's see. Okay. Can you see my screen now?
Yes. Yes.
Perfect. Okay. So my name's Hubertus Hofkirchner. Hello. I'm a serial entrepreneur. I mean, I've started out as a banker, both commercial banker with Citibank all over the world, and an investment banker in London, and later in Central and Eastern Europe. Bitcredit is my fourth venture. I raised and sold 3 other ventures: an online broker in 2001, a digital options exchange in 2008, and once I restored one of the Austrian telecom operators, and it was sold in 2005 to T-Mobile of Germany. So let's go into the situation with. Let me just get this correct. There's something wrong here. Second. To the topic. So as you may know, Bitcoin is said to be the fix essentially for a lot of problems through bad fiat government money. I mean, for inflation, which we had recently, for the whole of the boom and bust cycles, recessions, for the fragility, the house of cards, which is the banking system, and even the threat for people's life savings because of fear of inflation. And last but not least, in the next few years, what's going to be very important, the dystopia of CBDC money. You may have heard about it. It gives the governments the possibility to spy on every citizen and to turn off the money. But still, that said, Bitcoin somehow didn't make it, even in those countries where it probably would have been needed most. So not even in 2015 in Greece was it adopted when the people voted against the EU austerity plan. It wasn't adopted in El Salvador, even though it became legal tender there. And Argentina, where Javier Milei probably is running for president, being an Austrian economist, even he chooses to dollarize rather than to go to Bitcoin, which kind of means that the 44 trillion industry, which central banking is, still seems unassailable at the moment. So we think that the real reason for this failure is that Bitcoin, as many of you will know, has a fixed supply of only 21 million Bitcoins, while money demand fluctuates all the time. So, but without an elastic currency supply, businesses cannot thrive. Yeah? The economy essentially will grind to a halt. And so what Bitcoin really needs is an elastic currency supply, similar to banknotes during the time of the gold standard, so before 1914. But it must adhere now to the Bitcoin core values, which are, first of all, it must be a free market mechanism. Second, it must separate money from the state, from the government. And third, for anything in the system, we must have the rule, don't trust, verify. So Bitcredit protocol solves that problem with an, let's say, almost forgotten but time-proven method for private money issuance, which is called the bill of exchange. So what's happening there? We wrote, and it's already in alpha, an electronic system for bills of exchange. And these e-bills are the raw material for Bitcredit mints, which we call wildcats, to split these e-bills into Bitcoin-sized credit money, which we call Bitcredit. And these Bitcredits can be stored in people's private non-custodial wallet, no centralization there, and transferred with lightning speed all over the planet at absolutely no cost. And at maturity, the repayment of the bill of exchange automatically goes to exchanging every Bitcredit circulating into traditional Bitcoin. So a key element of this plan is that the mints must guarantee the money, because if a payer defaults, these people cannot wait for the Bitcoin. So they have to sell EIU, which is the meta money of Bitcredit, for Bitcoin and pay instead of the payer. Which means that as more and more mints and businesses join the system and Bitcredit volume rises, this produces a, let's say, network effect, because if one mint buys, the capital value of all the other mints rises, which gives great protection to the system, so that the money is issued by those mints becomes safer and safer. And of course, it's also a great profit opportunity for, mints, for project contributors, and of course for investors. So in terms of going to market, Bitcredit is most needed initially with companies in challenged economies such as Argentina, Turkey, Egypt, everywhere where there is big inflation. And expanding, once this has taken hold, the system stabilizes and can expand into countries with lower inflation and even more stability today, because it must compete, of course, against the US dollar, which is the turn-to currency at this moment when countries get into trouble and want to give up. So, but we calculated that even a final adoption of Bitcoin and Bitcredit with a GDP of only roughly, let's say, 0.5% of world GDP already results in a token price of something like $20 for an EIOU. Now, how do we get there? To this calculation, the total opportunity. Yeah.
Okay, actually, I have to interrupt you there because we already passed the 5 minutes.
Oh, sorry.
Okay. But you can always talk more about the Q&A part.
Yeah,
so,
sure.
Thank you for the presentation. So, Nathalie, would you like to start with your comments? What do you think?
Sure. So, I'm curious, like what's your legal setup? I think you haven't really touched upon it yet. But...
Yeah, the beauty here is that this instrument has been around for something like 500 years, essentially since the Medici in the Middle Ages, where the Medici family essentially made the transfers between the countries. So we're using this framework, which was standardized globally in 1932. And just 4 weeks ago, the UK was sort of the first major trading nation to codify electronic bills of exchange into the national law based on a EU convention here in Vienna from 2017, which allowed electronic bills of exchange. So this is a very established framework for regulation. And in addition, there's another thing. El Salvador, some of you may know, adopted Bitcoin as a national legal tender, which means now we can use bills of Bitcoin for bills of exchange. So we are in a very established, very simple regulatory requirement used by businesses all over the world.
Okay, understood. And could you also elaborate a little bit more on your fee structure?
Yeah, there's actually two things to this. First of all, there's the system coin. I mean, Bitcredit is fully open source, like Bitcoin. Everybody can download the software, run a mint, do bills of exchange. They're free. And so one of the business models, or the first business model, which we'll switch on shortly, is that people can simply invest in EIOU right now to make sure they have the capital to run mints. Yeah, we expect Bitcoin-related parties to be very interested in that. In fact, I'm giving a speech in 2 weeks in El Salvador at a big Bitcoin conference about this whole topic. So that's one. And in future, when Bitcredit mint the token, there will be a little tax to be paid in EIOU for the use of the system by mints in relation to the minted volume. And the other business model is for all these people who run Bitcredit mints, because we know from history that the discount fee on bills of exchange was roughly 4% per year. And so if we say that there's 44 trillion of central bank money in the world right now, 90% of that is 40 trillion, and 4% of 40 trillion means an annual business volume of 1.6 trillion. Of course, they will only come in steps. Yeah, I mean, one country after the other, probably one challenged country after the all, until Bitcoin stabilizes so far that it can compete even in the most developed economies, and hopefully earlier than CBDC dystopia kicks in to surveil us and put us under control.
Okay, thank you.
Thank you, Nathalie. And Tom, anything to ask or a comment?
Yeah, sure. So I guess there's a lot of stakeholders that have to change the way they operate for this to kind of, I guess, get going. Like, what's the biggest barrier that you see in terms of kickstarting this?
Well, that's what I reported. I mean, the problem is that at this moment, the volatility of the dollar is much lower than that of Bitcoin, which means that when countries give up their own currencies, such as the peso in Argentina, the first choice is the US dollar. And some people already use the dollar. Yeah, they use it in Argentina, they use it in Lebanon. But on the other hand, people also have started to stack Bitcoins, as they call it. And so there is also a ready community of Bitcoiners who will start working in that. And so it will be this phasing out, or this phasing in, let's say, of Bitcoin versus the US dollar, which will be the biggest barrier here. It's a big competitor, the US dollar.
Yeah, makes sense. Thank you.
Thank you, Tom. Robin or Salim, let's jump in.
I can just ask a little bit how you're thinking. When do you see critical mass? Well, do you have any levels you think is going to be needed for it to be
well,
adopted?
Interesting that you should ask that, being, so to say, from the Nordics. I mean, for instance, if you take the Norwegian crown, it's not the biggest country in the world, yeah, but still the Norwegian crown is rather stable. Yeah, so the difficulty here, which Bitcoin faces, having no credit money layer on top of the 21 million, which matches supply and demand, yeah, causes it to be volatile. So just like the Norwegian crown is not volatile, we expect that as soon as the credit layer comes to any reasonable size in just one country, one troubled country like Turkey, Egypt, Argentina, Bitcoin will stabilize too, and be able to compete on pretty much equal ground with established fiat currencies.
Do you see, being more of an expert on the regulatory risk, constantly being there with Bitcoin, and especially with current events being up for discussion again? How do you see that?
Well, the beauty of the Bitcredit system is that, just like Bitcoin, it builds on a very solid foundation which needs no government. Yeah? The bills of exchange framework worked for hundreds of years, even before that legislation was in place. So it is a very decentralized, very self-sufficient system. On a bill of exchange, everybody knows the other party. So there's none of these funny games which are going on in some cryptocurrencies. And the regulation has been tested for many, many hundred years. So some people have actually called the Bill of Exchange law the most beautiful law in the world, because it's so concise. And it essentially has taken care of any problem which can arise after the experience of so many hundred years. So that's the let's say the basis of regulation which we're building on.
Thank you so much, Hubertus. Your time is up right now. Thank you for the question, Robin. Great presentation. Okay, then let's move to the next company. The next presentation will be done by Christina Bielowski, CEO of the Join. Christina, feel free to share your screen.
I will try to do so. Wonderful. All right. Hello, everyone, and thank you for taking the time to listening to this. My name is Tina, and I'm the CEO and founder of Join. And what we built with Join is technically a wallet infrastructure for Web 4.0. And when we say for Web 4.0, we refer to the European Commission strategy for virtual worlds and assets that is basically an ongoing process in the European Commission at the moment. I think at the end of the day, what we're trying to do is we're trying to get users to seamlessly access digital assets in a regulatory environment or framework that, you know, is sustainable for a company or for the users as well. So we have a couple of issues with maintaining regulatory compliance at the moment, especially with centralized asset management or asset holdings. And we can see already from the way the Parliament and the Commission behaves, especially with the micro-regulation, but also, you know, from opinions worldwide of regulators, that regulation will favor non-custodial crypto asset or digital asset solutions. We can go into detail why in a later discussion if you want. It's quite interesting in itself. But one issue is that users themselves understand to struggle where regulation happens. And the second issue is that they don't know they do know about the risks of centralized asset management. When we talk about, for example, the bank runs, or when we talk about collapses of crypto exchanges like FTX, where if your assets are stored in a centralized manner, it obviously means if this centralized entity collapses, your assets are gone as well. And yet users as well as third-party providers do not know how to access decentralized or non-custodial solutions by themselves because it's really complex. You need seed phrases, you need to access every single DApp by yourself. And this is where Join brings in the solution with our tech solution of account abstraction as well, paired with multi-party computation systems. So we have one security layer, which is the multi-party computations. You can see that all assets are held non-custodially, so every user holds their own assets, but they never need to use a seed phrase to log in. So it makes it a really simple interface for every integration or for every user. You just put in your email, as easy as WhatsApp, you sign up, and you have a wallet generated. And we use account abstraction to make it this easy. So everything in the background, from swapping to even proof of law or bringing real-world assets on chain, will be done through smart contracts in the backend. And obviously in a traditional interface, we have the normal offerings of a FinTech like currency exchange, personal IBAN, and so on and so forth. And we can provide this in a fully regulated environment since we never ever touch user assets. So even on a traditional side, all simple modes where money has to be held somewhere custodially, this is done with vaults that are not accessible from one side. So what does Join Smart Wallet do that other smart wallets do not? You can see here, obviously we can enable the user to do pretty much anything from batch transaction to not needing seed phrase to even social recovery features for their account recovery, as well as no gas fee management. So you don't need to have ETH in your wallets or whatever to even start trading or holding crypto or digital assets. And how do we go to market? Just quickly, because the time is very short, we are going to go to market white label to blue label. So this is also our user growth strategy. We are going to offer a wallet solution to providers that want to digitalize or tokenize assets. And just to give the people that don't know so much about it a little overview, for example, we're talking with telecom providers for the loyalty or reward point systems that they can actually give these systems to the user in an interchangeable way. So let's say users from multiple countries can exchange their rewards with each other on marketplaces, or let's say one airline or one telecom provider that has multiple sub-companies can create one reward system for their users through multiple entities. And this can all be decentralized and on-chain, and therefore an exchange market can happen. We provide the wallet infrastructure, and obviously in a sense that if the customers then want to use our further wallet infrastructure, like on and off ramp, or like adding other assets, or even buying certain things from companies with crypto or digital assets, they can do so. And just at the end, because I know it's very compressed and there's a lot to talk about, this is the team that tries to make this possible. This is myself, I'm the CEO, and I also advise European Parliament on AI and future technology, especially the S&D group and Renew in Econ and Yuri. We have Kumadev Chatterjee, who is a very well-known figure in the world of cryptocurrency or digital assets and AI. He also an advisor to the World Economic Forum and to the European Commission. We have Per Malijak, who is the founder and CEO of Altarius. He's one of the largest European hedge fund groups or international hedge fund groups, who is our head of financial products. And then the rest of these awesome people on this slide is our team. We at the moment have a full team of 15 people that are employed for us. And just as an info for everyone who's kindly considering to invest, we are fully self-funded until this point, fully bootstrapped ourselves. And we would like to go into raise round now, especially because we have concrete partnership proposals or even signed letters of intent to partner with specific companies. And we would like to actually not be bound by having to go too cheap into offers when this also is our user growth revenue strategy at the same time. So do feel free to reach out to us with any questions you have. A lot of number crunching here as well. And if it's too complex, just ask.
Yeah, thanks so much, Tina, for the presentation. Salim, would you like to start? Any question or comment?
Yeah, sure. I think I have two questions. So the first one is about like the company you're targeting. You mentioned telecom company, for example. They seem like they're quite big companies, and when we target big company, this also could mean long sales cycles. My question is basically, how do you deal with that?
Well, actually, especially in telecom at the moment, sales cycles are not that long because a lot of these, I would say it's a race for the time. So who puts the program out first, who digitalizes first is going to win. So the people that I did speak to, for example, Perception Group Inc. or also Deutsche Telekom, they really want to be quick with putting out these products, and they want to win the market by being first to market. And so they try different models, different wallet solutions, and also different providers, and just go with who works best, in my opinion. So we have some integration requests already that should be done before Christmas, which in my opinion is extremely quick even. And the good thing is that this is not a one full bound solution. So it's basically a layered solution. You can use whichever part of the solution you would like to have. So for example, if you simply want to have a wallet for digital assets like reward points, you don't need an on and off ramp with this solution. You basically, people can buy through your website or get credited through your website, and you don't need any of the other features. So this is a very simple API integration in this case. But what we do as a business model, obviously, is we do take a profit share per user. So this is very large companies, which means that just by offering these wallets to the companies, we already have a very large user base that we can grow, and that we can then basically acquaint with our product at Join.
Perfect, thank you. And my last question was regarding regulatory risk. So how do you mitigate them?
Yeah, so first of all, what we're going to do, which I think is pretty unique for companies, we're going to be trying to be fully MiCA compliant in the European jurisdiction from the start, which we're going to do through the Parliament MiCA sandbox regulations. So we're going to work directly with the regulators while building the product. But I think the main, let's say, advantage that we have when it comes to licensing, and which is also why it's not such a big issue to scale it worldwide, is that we never hold any client assets, never, not on the traditional side, nor on the digital side. It's always self-custodial, and since we never can, we not only do not hold them, we also cannot touch them by design, and so obviously it's a lot easier for us to be licensed in all jurisdictions.
Amazing, thank you.
Salim and Tina. Nathalie, a question?
Yeah, maybe a question to the last question. So does it also mean that you don't, I mean, for sure you need to also stay compliant and watch your AML strategy and also
yes. So for everything where it touches traditional banking, we have a couple of different strategies. So obviously, when it comes to integration of fintech elements, we're going to do this through a BaaS solution. So we have third-party licensing in these solutions. And everywhere where we have client risk, for example, let's say we have credit card, buy with credit card, where we just do need an account where funds are stored until they're credited. These are going to be fully vaulted accounts. So we never be able to access the funds only through smart contract in this case already as well. And obviously for anyone who uses traditional banking products, this is normal compliance and AML procedures. And for anything on-chain that touches investments, which we can also offer, obviously, optimized investment solutions and so on, we white label wallets. And that's really cool because we do have the AML procedure through the traditional on-ramp. So technically we can white label a wallet as long, let's say with an NFT or any other trademark. And as long as we oversee the transactions on this wallet, we can guarantee the AML procedure on chain as well.
Okay, thanks.
Thank you, Nathalie. Tom, anything to add?
Yeah, just curious around, I guess, the key product or technology milestones over the next kind of 6 to 12 months and what you're trying to, I guess, achieve.
Well, our demo app is ready at this point in stage, and I think the retail product is going to be second stage. So first, we're going to start with partnership integrations, and they're going to be on demand. So let's say ICP Inc. says they need just a wallet, then we're going to provide just this wallet fast, but obviously use what we created for this wallet already as a database that we fully own. So we're never going to sign away the rights for the coding. Yeah. And then we basically just build block by utility. And let's say, depending on the resources, team growth, or even let's say how much investments we get, we obviously want to build the full retail app as soon as possible. We want to launch it Q2 next year, if possible. But obviously, we need scaling for this.
Yeah, that's clear. Thank you.
Thank you, Tom. We actually have about less than a minute, so maybe Tina, do we have any final words before we?
No, just I know that it sounds very, very complex and it's a lot combined in one product. So please don't hesitate to reach out only if certain strategies of it interest you, because we're still building and we're also always very happy about feedback to what we're building and where you see market fit. But what I can say is that everyone who spoke before me in this panel, one way or another, could have utilized our solution and it would have helped them to get better.
Absolutely. Thanks so much, Tina. Great presentation.
Thank you.
Thank you. And the next company is Monitok. Eymantas, CEO and founder of the company, will present the opportunity. Eymantas, feel free to share your screen and start the presentation.
Yes. Hello, guys. Can you see my screen?
Yes.
Yes, so my name is Eymantas. I'm the founder and CEO of Monitok, a hybrid crypto exchange bridging the gap between centralized and decentralized platforms for retail user. One second. Yes, so I would like you guys to show you firstly a short video brief about our platform before starting my presentation.
We don't see it yet, but I'm not sure if you already opened it.
Looks like the screen froze, huh?
Yeah, we don't see it yet.
Guys? Hello? No?
Okay.
We see a slide called a path forward.
Okay, sorry. I'll just get on with it then. So obviously, as every project, right, we have to highlight the issues, problems that we need to solve. So we as a team highlighted two main issues with the crypto exchange industry. One with centralized exchanges that they lack user ownership and transparency. Another one with decentralized exchanges that they lack user experience and in general are very chaotic for a retail user. So our solution is a hybrid crypto exchange that's combining those two worlds together, providing our user with a user-friendly, very functional app-based platform. And the backend of it is fully decentralized, built on Arbitrum, and we issue our users a abstracted no-custodial wallets, which gives them full support to full asset control. So talking about the market opportunity, it's generic numbers from Statista, but what you have to really look at is the numbers on the right. So our average revenue per user in the cryptocurrency segment in 2023 is 117 euros, and our expected yearly transaction revenue when we reach 50,000 users is around 50 million. Our unique selling points are a abstracted non-custodial wallet, which gives our users full ownership and control of their assets. A abstraction means that their gas and swap fees can be covered with USDC at this point, and later on with any other token that they have in their wallet. We also integrated a DEX price aggregator into our platform, which means that we're connected to 100 different decentralized exchanges, and we're able to provide best price possible at the current time for our user. Another one is a banking-like experience, which will give our users on and off ramps, personal IBANs, and effortless peer-to-peer transactions. So I'm very glad to announce that we're already at the beta version stage. We just dropped our beta version. We just dropped our beta version. We're looking to onboard 100 users to test the app and fix it up by their comments and build the features upon it. We have four different monetization revenues, which are trading revenues, native token revenues, DeFi revenues, and platform revenues. Our main competitors as centralized exchange is Crypto.com, and our main hybrid competitor is Polkadex. So we're looking to target, our main target group is centralized exchange users that want ownership, that usually trade at spot and basically are linked to Crypto.com because we see a big gap in that space. Now we'll talk about the funding needs. So we're self-funded up to this point, but now since we're looking to drop a production version in a few months, we're looking to raise 2,862,000 euros and giving up for that 20% of equity. And we're going to give a corresponding amount of staff to our early investors. Our cost approach is 18 months period, and main expenses will be marketing, headcount, technology, legal, and infrastructure. So we have a team of 10 people right now working on the project. It's me, who is the founder and CEO. We have my partner, who is the CFO. We have a really strong team and advisors in Web3 area. We have Web2 marketers, we have Web3 marketers, and in general, 3 other developers working on the project daily. So thank you guys for your time. I really hope you enjoyed the presentation. You can feel free to scan our QR code and visit our website, join the waitlist, and soon enough you'll be able to enjoy our platform.
Thank you so much for the presentation. Robin, would you like to start?
Yeah. Can you expand a little bit more on who your target customers are in this case? It feels like this is a space that's getting quite crowded and a lot of people targeting the same kind of customers.
Yeah, sorry. So I guess, now what I see in the market is all those, wallets and sort of DEXs for mobile applications are targeting sort of crypto degens, right? Those people that, are really deep into crypto. And I guess the reason for that is that the reason for that is that the market is pretty bearish now, and it's pretty hard to attract a retail user. So I guess, we're also understanding that, and we are looking, that's why we're built on Arbitrum network. So we're sort of linking ourselves with their platform, their marketing campaigns. We apply for their grants. And since it's a very popular network, we're targeting to approach a lot of crypto degens through that. But in general, our main target group is those centralized exchange users, spot traders, that are looking for a transparent exchange, where they can have the full ownership of their assets. And as I mentioned before, the perfect target for us is Crypto.com users, because I'm pretty 100% sure our user interface is much better, our functionality is much wider, and at the end of the day, you get a full ownership of your assets. So of course, that's much better.
Thanks.
Thank you, Robin. Nathalie, any question?
Yeah, I also have 2 questions. Also, going back to the competition. So what really makes you unique, and how do you position against your competitors?
So I guess what makes us unique, is our wide range of functionality, super user-friendly interface, and the backend that's fully decentralized, which gives the full control of its assets for the user. I mean, if you follow the wallets, that are around the market, they're very basic, they're very generic, and they all have pretty similar functionalities. They're mainly based for crypto degens, for people that just use it to connect their wallets, go search the browser for the dApps, connect it through there. But there's nothing coming in the market for, the retail user. For a user that's gonna come back, when the bull market comes, he's going to join and he's going to want some new alternative for an exchange, which will have a very wide range of functionalities.
Okay, thank you, understood. And another question, also like on your legal and compliance consideration. Could you maybe share your roadmap, like how you get licensed, or?
So we're currently licensed in Lithuania. We're under a master registration. This is our roadmap. So as I said already, we're already launched our beta version. We're already onboarded around 50 users, on which feedback we're building on the platform, seeing what works, what the users like, what they don't like. We're looking to launch a production version, let's say, in a month. So I guess, and I didn't really hear the very beginning of your question.
Yeah, just about your legal and compliance setup, because I haven't seen it on.
Okay, so basically so we're going to use third-party providers, right? So we're going to use the on-data platform for the user QKYC, and for now we're using CoinFirm and TRM for the wallet checkups, and we're using TRM for the liquidity provider checkups by their liquidity providers. Because we're a peer-to-peer trading platform, so we have to really make sure that the pools that we're integrating with, are clear.
Okay, got it. Thanks.
Thank you, Nathalie. Tom?
Yeah, I'm still not sure how you compete with someone like Coinbase, who offers a self-custody wallet. Like how, given their scale, user experience, you can argue maybe it's not the best user experience, but it's enabled to scale to sort of tens of millions of users. Yeah, please expand and convince me on that.
So at the end of the day, right, the Coinbase, even though they say they issue non-custodial wallet, but they're not really non-custodial wallet. Everybody knows, right, that they're still sort of centralized, and I guess, if they fold, you fold together with all of that. So I mean, what we provide is a fully non-custodial solution with a really nice user interface, right? Since I've been trading crypto from 2015, so I really have a deep understanding of what the users wants and needs. And since I was trading and I would have to use several different exchanges for various functionalities, I just decided, it's time to create one for the retail users, which has something to offer for everybody.
Okay.
Understood.
Thank you, Raymond, and thank you, Tom. Time's up right now. Thank you for the presentation. And now we will move to the final company, the last page, EarnBIT. Philip Grisov, CEO of the company, will do the presentation.
Yep.
Philip,
Hi.
yeah.
Just let me see. So is my screen viewable? I mean, can you see it?
No, not yet. Eamon, could you please stop sharing your screen? Okay, thank you. Now we can share, Philip.
Moment. I don't know. Oh, okay, right. Just a sec. Share.
Yes.
All right. So yeah, once again, hi to all, and thank you for having me. So as a CEO of EarnBIT, I will describe our unique project, crypto streaming exchange, and the investment opportunity provided through EBT token. Today, EarnBIT.com is a fully functional exchange with spot trading and launchpads. On our website, you can see real-time statistics, including trading volume and user count. But our vision is much broader. We are building an ecosystem that runs on the EBT token. The heart of this system is our own streaming service. It will appear in a trading interface, so users join streams directly. So what makes EBIT attractive? First, it's the focus on streams that will drive growth. The research shows that it is the most engaging and efficient educational format. It is also very popular. Over 1 billion people watch streams, and the projected growth rate is over 20% a year. Right, yeah, streams are the most popular with millennials and Generation Z, so the most active crypto users. We bring two industries together to solve their challenges, from lack of trust to poor monetization. EarnBIT streaming benefits speakers and users of all levels. Content creators, beginners, experts can instantly maximize exposure, gain and improve credibility through performance, and boost profits with EBT donations and affiliate rewards. So it is a marketing tool, an educational platform, and a community building space. There will also be streams by EarnBIT, an educational library that increase transparency and trust in the eyes of our users. This format is extremely flexible. Speakers can hold interviews, Q&As, show trading strategies, discuss marketing news, and even more. This table shows why existing platforms, generic and crypto, are far from perfect. Our discussions with popular influencers like BitBoy Crypto, Michael Wittman revealed 10 features that truly matter. As you can see, our model includes them all, and it is also the only model where a utility token is an organic part of streaming. So, and going back to EBIT, it is the lifeblood of this ecosystem, an ecosystem that meets actual needs. It is revenue-based with multiple revenue streams and utilities. Every product on EarnBIT includes EBT. Users can pay discounted trading fees in it, donate to streamers, and even more. So the figures here describe our token generation events. Full tokenomics is on our page on the site, so together with a white paper. And we are now in the private round, so and offer a 10% discount to all buyers of the EBT token. Like I said before, it has multiple utilities. Its value is backed by several revenue streams, and the benefits will only grow and we move forward. So I will skip the slides because we're limited in time, but if you want, I could return back to the team. So as you could see from the roadmap, EBT will be integrated across the board to ensure its long-term value. So that's all. Thank you very much. I'm happy to answer all your questions.
Thanks so much, Philip. Robin, would you like to start with your comments or question?
Yeah, maybe this is lack of knowledge and the investment philosophy, but could you please just answer a simple question? What is the one pain point, the big problem that you guys are solving? Because I can't really get what the core idea behind the combination is.
Yeah, actually, I could say that the key problem is the entire problem for newcomers, for newbies who just want to start their experience in crypto. I mean, the flow is pretty simple. When someone just decided to get some new knowledge about it, what they do, they go to the YouTube, they search for some streamers, traders, and they start their investing journey or trading journey on different platforms because of not all of them. I mean, not to all streamers we could trust, and some of them, I mean, could advertise some, you know, the coins which could bring some losses to newcomer, to the newbie. So they invest into them, and finally they face losses. So they start their experience, you know, in a bad way. So the key problem is that we minimize potential entry size for newcomers and newbies.
Just a two-folded question. What's the incentives for the content creators on the platform, and how do we avoid the intended fraud, or what do you want to call it, the self-interest?
Yeah, first of all, we have KYC for influencer, and what we're building, we're going to have some sort of trust rates. So if it's a trader, then the trading results, they will be recorded, so which will bring him extra score in a table, let's call it trust table. And also the users who already follow that influencer, blogger, or trader, they could vote, so which will increase him in that rate. So let's say bring him to the first position.
Okay. I was just thinking, if you're both a trader and a teacher, you sort of have an incentive to
actually, it gives the possibility to different. I mean, it doesn't matter if you're a trader or you're a teacher. You can even just make some sort of market overview, or let's say if you're a company and you just do some market analysis. Doesn't matter. The trust rates will be built by trading results. If you're not a trader, it will be built by voicing of users who will be on the platform.
Okay, and what was the incentives? Maybe I missed that, for the creators to do these streams and so on.
I'm sorry, I didn't get the
question.
question.
What's the incentives for the creators? What do they get for streaming?
Actually, first of all, if we return back to traders, they get commissions from their community, because if the user subscribes to this trader, he will get commission out of users trading, because we as a platform, as an exchange, we earn from trades, from exactly taking commissions. So the other way is we have donation function. So let's say if they want to test some idea, or if you love that, I mean, a streamer, you could make some donations to it. So that's the ways of how they could monetize what they do there.
Cool, thanks.
Thank you, Robin. Salim, any question from your side?
Yeah, I think I have a couple. So first one, I mean, we saw streaming platform come dump money onto streamers and disappear, like Mixer, for example. My question is, like, how do you plan to attract first the streamers, and most importantly, the viewers of those streamers, and keep them?
Right. Yeah. So first of all, I mean, our exchange is alive, because we already passed pre-seed stage, and that's how we developed the exchange. I mean, all trading tools, you can check them, pass KYC and start trading. Due to the question how to attract streamers, actually, we had several discussions with different ones, and most of them, they was pretty happy to have like, let's say in our tokenomics, we have allocation for streamers. And on the other hand, we're going to provide commission to them, and plus there's going to be some sort of bonuses to the first ones who will be some kind of ambassadors of the platform.
Okay, but how do you keep them in the long run? And especially, how do you attract the viewers of those streamers? Because I mean, like, how likely are they to move from Twitch to go to your platform, you know?
Yeah, right. So as I mentioned, they're going to have like we have the amounts in allocation. Due to tokenomics, there's a cliff period when the funds are locked. So due to the cliff, they will be unlocked during the long period of time. So if streamers, they want finally to get their rewards, they should stay for long on the platform.
Okay, thank you.
Thank you, Salim. Nathalie or Tom, anyone wants to jump in?
I can go. How do you moderate the content on the platform to ensure that, you know, I guess it's of a certain quality, or avoiding scam artists? Like, how, you know, that's the point of centralized, I guess, content platforms.
Yeah, actually, there is already some solutions, let's call them, that could be integrated through API. And what we're having right now, it's a negotiation with different partners who are going to actually close that point. So we're not going to do it by ourselves. It's the same as happens with KYC, as most of companies use sum and sub.
Yeah, yeah, I think that's a really important part. And I think it makes sense to partner with people, but yeah, how that works and the kind of robustness of that at scale is really important to test.
Yeah, sure. I mean, in the private talk, we could all share all this information, and also I could invite our technicians who could actually, tell a bit more about it.
Great.
Because I'm mostly from business development side, so.
That's great. Thank you.
Yeah, thanks so much, Tom. And actually, time is up. Thanks so much for the presentation, Philip. That was great.
What should I do? I should switch off sharing, yeah, I guess.
Yeah. And we will wrap up anyway. So thanks so much for everyone joining the conference and staying with us until the end. Maybe just before we close, I can say just a final words from the advisors, maybe final words and say goodbye to the audience. Tom.
Yeah, sure. No, just wanted to say, thank you for all of your time and thank you for your pitches. It's not easy to pitch in 5 minutes your whole company and wrap it into one. I think generally that was really well done. And thank you for taking on our questions head on. It's not easy. They can come from every angle. So yeah, just a massive thank you to everyone presenting, and yeah, it was great meeting you all.
Thanks so much, Tom, for being with us. Salim.
I guess gonna have the same words as Tom here. Thank you for having me. Thank you for having us. And yeah, I mean, most of the pitches were great to hear. And yeah, hopefully we can follow conversation after the event.
Thank you, Salim. Nathalie.
Yeah, I truly agree with Tom and Salim. Thank you everyone for listening, and also of course for the founders for the pitches, which are super interesting. And I'm also happy to keep in touch afterwards, and yeah, also feel free to reach out to me afterwards. And yeah, thank you.
Thanks so much, Nathalie. And Robin.
Yeah, thank you guys. Once again, proving why this is the best job in the world, listening to the ones pitching and doing what we other investors wish we could do. It would be great to stay in touch afterwards and follow up. You can probably get our details from the Startup Club, I assume.
Thank you. Thanks so much, Robin. Thank you, all the advisors, all the presenters, and all the people investor in the audience. We will have new editions in the new year and next year. So let's stay in touch and have a great evening or have a great day wherever you leave. Goodbye, everyone. Bye-bye.
Thank you.
Thanks.
Thank
Bye.
you.